Okay, ladies and gentlemen, boys and girls, time for what so far being a very boring Monday. We'll see if we can get some sort of movement later, but I don't think we will. And I'll give you my rationale for why here in a second. But as always, I've got the chat opened up down here. Make sure you're asking any questions you have about anything when it comes to trading or stocks, crypto, whatever it is. I'll take a look at it. But first, you guys have to hear me rant for a little bit while those questions come in. So the sooner I see the questions, the less of my ranting. But let's get and grab this. A couple things I want to talk about right off the bat. If we bring this up, let's actually get rid of the green line. So we're only looking. This line right here, I've been ranting about 4 months now. It's not always important, but it's important right now. And this is basically the commitment of traders report. So way back in the day, a bunch of people tried to do a whole bunch of shenanigans with the futures markets, specifically silvers. So if you want to take a look at, I forget the name of the brothers that tried to corner the silver market, but they tried. And ever since then, there's been all this regulation. So when you put on a futures trade, your broker reports that to the CFTC and says, hey, this person is a large speculator or a small speculator, and they are either long or short. And so that's all reported. So think about it like a more accurate, faster updating short float data on the market as a whole. And they've been short, as you can see. This line goes down. They're getting more and more short. They have been short a lot and for the entire time. And this thing has been moving up the entire time. So obviously these guys are getting absolutely destroyed. And if you go to RTY, which is our Russell 2000, they've been short even more. And all of that against the Qs, which they've actually been long just a little bit, not as much, but a little bit of. So there's been this trade going on for basically the lows in April. Let's short the large caps, let's short the small caps, and let's short the SPY or the S&P 500, and let's buy the NASDAQ. Let's buy big cap tech, and let's short everything against it, and bet that large cap tech is going to dramatically outperform everything else. And that worked for a long time. And the beauty of it is when you're long and short something, generally speaking, you can leverage that trade up. So I would imagine this trade is pretty leveraged. And what we saw last week and what we've been seeing recently is a complete kind of reckoning and unwind of this trade. And I don't think it's done yet. And the reason for that, if you look at how these lines move sharply, it's because it updates once a week. It updates on the weekend, which is one of the reasons that I come and I bring this to you guys when I'm here on Monday, is because this data is as fresh as it can be. And you can see a nice tick down here. So they did sell a little bit of the Qs, but not very much. But more importantly, if we go to the RTY, holy smokes, there we go. The Russell, you can see they covered, but not an insane amount, just a little bit of an uptick. So they went from being down, short maybe 100,000 contracts to around 80,000 contracts. It's not as much as I would expect, as the Russell is just rocketing here. So we know these guys are hurt because they've been shorting as this has been ripping up. So I think that today, notwithstanding, because we have the Qs up and then everything else down, that we're going to continue to see this over time. We're going to continue to see people, this unwind of being short or long large cap tech against short small caps. And if they have to implode, which they certainly can, it's going to happen really, really quickly. Because if this unwinds because it's a bad trade and they just want to get out of it, they can take their time and they can do that. If it is a liquidation break, like I have to, a hedge fund explodes or an institution shuts down or a large investor redeems their money back or something like that, this can happen real fast. Because if you're short and you're wrong, doesn't matter if you're the largest hedge fund in the world or us, that bank comes a knocking. So I would be very interested to see if this continues. Now, when I go through the list of name or sectors that are up a little bit, we have MSOS up, which is your marijuana sector. We have psychedelics still up a bit, was up really huge earlier in the day and has pulled back pretty much to its opening price. So we'll see what happens there in the long run. But we're getting some of these more, and I consider both of those speculative sectors. Right? You're not YOLOing your money into psychedelics if you're worried about your job. hopefully, probably. And while these more speculative sectors and smaller cap sectors continue, again, I think there is an opportunity there for people to potentially take pretty decent looking trades on that. So if you're someone who is following the big cap techs, if you're someone who is following this particular side of things for a long time, it just might behoove you to start to expand out and to start to look outwards and say, well, maybe it's time for me to focus other places in the world and focus on other particular industries out there, as opposed to just, you know, Palantir and Nvidia and all these names. Because if they have to sell those, they're going to sell them down aggressively, and they're going to use that to buy back that IWM. So that flippening may occur. IHHL, I see this spammed a lot, so it's probably junk. Yeah, this one of these companies that may or may not be going bankrupt very, very soon. They were a $500 stock that went as low as 8 cents and then got pumped out of that. So this is, I see health technology, so it might be one of these names that, you know, maybe they're close to some sort of drug or something that would be interesting. But like I say, with all these, you know, they've already done a massive reverse split and diluted their float quite significantly. So this seems like one of those, are they still burning money? Yeah, and they're burning money pretty dramatically, and they have earnings tonight. So what I'd be looking for in earnings, revenue, $200,000 in revenue. So I bet you a lot of people in this particular call make more money than this particular company. So congratulations. And they're burning money pretty substantially. So then it comes down to what's their cash runway, how quickly are they going to dilute based off the back of shareholders, and do they have a chance of being a profitable or a company that exists at all? That's the things you got to look for, especially if they're researching something. You got to go cash runway, because they're making near nothing. Like the CEO's salary is probably more than their entire revenue. And yeah, they're burning that money. So you look at that and you say, well, you know, I know there's a whole bunch of bag holders in this from 30 and 10 and 5 and 2 and now 1. Do they have a chance, right, of even existing? So this isn't something I wouldn't touch this with someone else's money, to be honest. Hims is one of those that's just she's a choppy one lately. Just grab that and move that up there. It's a wide range. You're talking a range from 40 to 70. You're talking a huge 65% range, but really I look at this as being just range bound, and chopping within this range keeps hitting this support at 41. I want to buy the breakout of this range if that ever happens. If we ever get, I have an alert set up here at 69. I'm more than okay missing that move in order to wait for some sort of a breakout higher. But until then, yeah, you could play against the support. This feels like a pretty dramatic sell-off. I doubt that support holds with any kind of sustained further there. If I go and take a look here on HIMS, I don't even know if it's heavily shorted anymore. Oh, 32% short. That's pretty significant still. So it's a decent little short float on that guy. But again, I always say the recipes for short float are: 1, you need the thing to be heavily shorted. 2, you need those shorts to be wrong or threatened in some way. And they're not in this case. So, you know, if we take a look, you can also see where the shorts kind of came in. So they started to short this thing kind of back here in the 20s and 30s, and they've just been short that name ever since. So they're probably on average break even. If it gets back to highs, that's interesting. But here, I think it could be a mess for a sustained period of time. And I talk about it all the time. Dead money is worse to me than losing money. I'd rather take a trade, take a hit, you know, curse about it a little bit, be a little bit upset, and then just move on after that. TGL. Bankrupt, or going to be bankrupt soon. Treasure Global. So this is a company that was a $35,000 stock and is now barely $1. So they're not doing too hot. And they have earnings, I guess, coming up fairly soon. They are at least stopped going down for a period of time. I want this, you know, before I ever pick a bottom, I want it to stop going down for a while, like so some zone in here, right, where you have some area of consolidation. So if it moves higher, that's great. I would just again assume that you're never getting back up here because you'll probably be worth more than the entire United States of America if you do. What do these guys do? Commercial services? Are they like a fart coin treasury now or some craziness? But I don't know. So maybe a little bit of a rounded bottom forming, but just an awful company. When I look at these things again, there is some guy who bought this at $6,000 and it's probably still holding. And there's some guy, poor guy, who bought it at 500 and 100 and 30 and 14 and 6 and 2 and now at 1. And if it loses this $1 for any length of time, they got to do this nonsense again where they do reverse splits over and over and over again. And I just don't want to be involved in anything like that, right? You want to take this chart and you want to invert it. And those are the companies you want to buy. The ones that are doing this, not this. I know there's something, I keep trying to battle it with people. It's because in the rest of the world, we're kind of told that buying things at a discount's a good thing. In the stock market, that's generally not the case. You can look at myriads of studies, tons and tons of studies that say if you buy a stock that's breaking new highs, new 52-week highs, new 6-month highs, new all-time highs, if you buy that name, you're generally going to do way better than ones that are hitting new lows. Just a little bit of tip there. So Intel is something a little bit more like I would potentially buy for a dip buy. If I was looking to buy something that has been down, just looking at the chart here, and we'll get to the what happened that might make this interesting in a second, but this is August 2024. So for about a year, it's just been trapped in this base and done nothing. That means if this base resolves higher, that to me is a potential good trade. That's something that I might take a breakout because it means that there's been a whole bunch of people accumulating in this zone, and anybody who wanted to sell has had the opportunity to because this has existed for so long. That's really the main criteria for me is I want bases that have been around for like a year plus and just showing that it's moving sideways. And then if that base resolves higher, at least you have all of the people who've been accumulating here as kind of, they're with you. They're backstopping this. Now, right, it depends. Now, whether or not you think buying a large percentage of this company is just, how pro-socialism are you? That's the one thing that worries me as a capitalist through and through. When the government starts to get involved in your company, I'm like, well, is the government a good distributor of capital or a poor distributor of capital, right? Do I want a socialized microchip manufacturer or not? And again, it's entirely up to you. I am one who is not generally huge into the whole socialism thing, and that's, exactly what is happening here. And if someone's telling you that it's not, then run from that person, right? It's a pure, it's a socialism play, right? They socializing Intel, at least a large percentage of it. Now, Fannie Mae and Freddie Mac have been doing great, FMNA, and these are FNMA, these guys. So these were socialized all the way back in here. All the way back here in 2008, they were socialized. So you had to wait a while to get your money back, but eventually you did. So that's an interesting one. It's the only example I can think of off the top of my head about when the government has socialized a stock or a sector and has performed okay with it. Now, I don't know. It's only 10% of them so far. So that is kind of encouraging to me. I want to see a break and a clear through $26. That's kind of my trigger point here for Intel. If we get through that, I'll probably take a little bit of a swing on it to see if we can push higher here. I just does not sit well with me the whole pro-socialism movement that we're seeing here when it comes to buying stocks like this. It's just not. I just don't think the government's great at managing industries, especially like high tech. I don't think pro high tech Like, it's not like something I'm super excited about. Or big cap tech, I'm not like super excited and say, hey, oh, the government is really good at doing technology, so therefore I want the government to be holding that. So to each their own, right? But yeah, a close above 26, I'd probably take a shot. And then, your stop is probably in the middle of this range right here. And then you see, hey, maybe having the government owning you ends up being better because I guess the company doing it hasn't done too well. So 10% ownership in this, I guess, isn't the worst thing in the world, but again, it's just something that doesn't sit too well with me as a capitalist who just kind of believes that if your company sucks, it should go to zero, and that the government shouldn't come and bail you out. I know they wouldn't bail me out if I needed them. Open, full disclosure, I am long open from kind of in this area, this 250 zone. So this has been a great trade for me. I just want to always, before I tell you what I think about the company, I just want to say I own it. So, take that as you will. No update to the short float that I can see here in open right now. And that means they are still short about 24. Let's just say a quarter of this float is short. We need to see that new update. I thought it would have happened already. I thought it was, oh, maybe it's the end of the month now. Maybe is it the 5th? Because there hasn't been any update all month. Let me go to shortsqueeze.com and try. Short squeeze. What is it? Open. I'm just trying to see because the big premise, days to cover, is 0.8. So I don't know. That's not a big deal. What I'm trying to look for, my whole premise behind this trade is that you can see where the short float really ramped up. And that really ramped up in this zone right here. So anywhere between $1 and 50 cents is where we can see the majority of the shorts were put on. Those guys are having a bit of a bad day, a bit of a bad couple days. You're down nearly 1,000% on the average short. They have to get out sometime in the near future. And I'm just looking for them to get out, and then I'll move on with my day, right? I'm not one that will join a cult and think Bed Bath & Beyond's coming back and AMC's going to the moon and any of this stuff. I just want to see some indication that, yes, these guys have capitulated, they've covered, and as soon as they covered, I'm probably going to be out. It's got a lot of resistance up here at $5-6, so the fact that it's clearing that is positive. For me, it's just I'm going to be checking every day just to see what is that short squeeze potential that's going on there, and is there something that we can end up seeing or doing there at all? But really, I can't. There's nothing that's standing out to me saying that yes, that this is a great buy right here. I certainly wouldn't. I'm not selling my shares. I wouldn't short it. So it's one of those, unless you already own it and you own it from a price you're comfortable with, I think this is just a pass, right? CRWV. CoreWeave. So CoreWeave, it has broken. This has been the important line in the sand for me of CoreWeave. This is the anchored VWAP from all-time highs. And that anchored VWAP are not all-time highs, the IPO. So like the birth of the company is right here. That to me is usually a pretty important price because it just shows you where the average market participant is kind of forever. Like this, that hasn't existed before here. And as long as that held, I'm trying to think, was it Circle that held that really well before? Yeah, yes. So you can see it held this very well for a couple bounces, and then when it finally broke, it broke. And you didn't look back, and kind of the same with this. You had one great bounce off it, and then it just completely fell apart. So until we start to resolve some sort of base higher or break a downtrend or something like that, this is just a broken stock that, right, $200 was probably a little bit crazy for it. $40 was probably also a little bit crazy for it in the downside, and now it's just going to exist within this range. And Tempest is a good example of this, that now it looks like it could be resolving, but if you had just sat out of this entire time in Tempest, you would have been probably richer with less gray hairs. So That's how I look at a lot of these things when it comes to IPOs, is that quite often there's just junk. There's a long period of time of junk, and then it breaks out. The question is how much you want to frustrate yourself with that junk, or do you just want to take your trade and move on with your day? OSCR. I keep seeing this one mentioned. I guess it's in the healthcare kind of news. All-time lows, anchored view app. That's what that blue line is. Looks like that's holding. I think I've talked about this one a couple times, and it's really just in this large base. You know, it's between 17 and 22. As long as this base exists, I don't predict things in bases. I just don't think there's any edge there. The thing I like about when they break out of bases is not that, there's some sort of genius 100% trading strategy, but you have a level that makes sense to buy it from, and you have a level in which you're wrong. And those are the two things that are very important to me. So I want to see it break. I want to buy it as it breaks, and then if it falls back in the base, I'll get out. And I will know half the time, probably more, it will fall back in that base and stop me out. And I am totally cool with that, and not concerned at all. If we stay or break out of that base, just don't really care, right? It's just I want to see something occur in order to get me interested and to say, yes, people are excited about this in a way that at least they're okay with buying and paying up in price for it, which is really, at the end of the day, when you really sum up technical analysis and what we're trying to do, that's it. Is, are people okay with buying the stock at a higher price? And are they okay bidding up the stock? So buying it at higher and higher prices as time goes on. And when you're in a base, the answer is no. And when you're selling off, the answer is also no. It just means that it's selling off. Nothing's really happening. There's no bid in there. There's more aggressive sellers than buyers. And when you're in a base, doesn't mean there's more aggressive sellers than buyers. It just means that really no one cares. This is, when you're hanging out like this, it's just no one's willing to push that. No one's willing to buy that aggressively and to push it higher and to really get excited about the name. And if they're not really excited to buy the stock, then why would I be interested in it? I want things that people are like chomping at the bit, like Open we just talked about. Right? People are really excited to buy this thing. I'm looking, every time you see me look down here, it's because, hey, I'm looking at what potentially is going on with Open. It's part of my portfolio. People are very excited to buy this thing. This is very interesting to them. This other one, not so much, right? CLF, Cleveland Cliffs. Here's another one, just kind of range bound. Not really too much going on. Pretty big resistance up here at 11. That would be this would be the zone that I would care about. Is, hey, if it can get through 11, maybe this is a big kind of rounded bottom like that. And if it can't get through 11, then hey, maybe it's time just to leave and never come back. This, and then you zoom out, we are at the same price we are here in November 2016. So let's just like ruminate on that for a second. If you own Cleveland Cliffs 10 years ago, you've made or lost no money. And you've had some wild swings from there. You've gone all the way to $2, and then you've gone all the way to $36 and back and forth. Great. If you timed it perfectly. It's just, do they pay like a really fat dividend or something? No, I don't even see a dividend there. So this is what I talk about when, my greatest fear in trading is not losing money. My greatest fear in trading is just being stuck in a range like this for an incredibly long period of time, is because you don't really have that trigger to say you're wrong, get out. And you don't have any potential way to take profits because you're right. You're not getting any capital appreciation. So maybe, right, you take a shot above this like $11, $12. Maybe you get to 15, 16 bucks, but right, what else are you expecting with a name like that? All right, CLF, and then TOON. Never heard of TOON. Cartoon Studios. This is probably why I've never heard of TOON. What happened here? Where it went from 52 cents to $100 and back down? Yeah, that sounds a little bit wonky there. This one has my I'm worried about this stock kind of written all over it, where we have these crazy, like, what was this month where it went from 56 cents up? Can I find this on like a weekly chart? That's insane. I actually did that. Down ticked to 52 cents and then uptick to 125 bucks. Some poor guy bought this at 125 bucks. That poor one out for that guy. That's wildly unfortunate. Wildly unfortunate there. Just moving some stuff around here. There we go. It's under a buck, right? It's hemorrhaging money. Yeah, it's losing money in an environment that you can make 14% by doing absolutely nothing with your life, right? So why would I buy this thing? Now, pure pattern point of view, it doesn't look horrible. You got this kind of, call it maybe a cup and handle play, but it's been under $1 for a long period of time, which means that they got a letter from the NYSE saying, hey guys, you got to get your price over a buck or we're kicking you off and you can just go home. And that's not really something I want to play too much with. It's not a game that I want to play, and that's the game they're playing. So, I kind of look at that and say, I worry about these stocks that are near a buck. I really do, just because you have such a potential bad outcome of either they get delisted on you, which sucks, or they have to do a reverse split, which also sucks. And you're asking yourself, do you want to be part of something that has to do that kind of shenanigans in order to stay alive? And for me, no, right? For me, I don't want to play that game. It's not an interesting game to me. I'd rather find a company that is healthy enough on its own right to stay listed than to have to buy things that has to do all kinds of financial shenanigans to not get kicked off of the exchange in which it is. Open again. Someone's saying late. Yeah, that's not a thing. PLTR. STI will do first. That's not it. That's it. So yeah, speaking of junk, right? I feel like I'm being mean today, but the stock is down 99.5% from all-time highs. It's not a good stock and it's not a good company. And they recently did that reverse split of 1 to 50 to stay listed. You have to have, if you're looking at this, technical analysis will not save you in something like this. You have to have some idea or some reason why you think that this awful company is going to be able to do something to no longer be an awful company, and that they're going to do it pretty simply, right? Or pretty quickly. And it's a financial conglomerate. You're a financial conglomerate, and you can't do anything to stay alive. No shot in this, right? No way I would touch this with my money or anyone else's. Palantir. So Palantir actually leads into, I think, a bigger and a little bit more interesting discussion. Palantir, I don't know. It's crashed, but it does that all the time. I think it needs a little bit more time to kind of chill out or resolve itself before this crash could remain higher. I think you got a pretty significant area here at this prior all-time high at about 140. I think if it's above 140, you're probably good to go. If it loses 140, it's probably time to exit. But this is the kind of thing that is, very indicative to what I talked about at the top of the hour when I talked about how this rotation is occurring, in which, by rotation, I mean people are buying strong names and they're selling weak names. And they're buying small caps and they're selling these kind of more overextended large caps. And I don't think it's so much a knock against Palantir as a company. It's just a knock against the positioning, which, we talked about. The positioning is everyone in the world, every guy and their dog is short aggressively small caps. And against that, they're long the NASDAQ, right? Which this would be I think a pretty healthy part of that kind of high-tech sector, I guess is a good way to look at it. So I don't think that you get a recovery in this large cap kind of tech, more speculative tech, I guess we could call it, universe for some time. I just don't think you see it. I think you get more of what we're seeing now, which is you have, again, more activity in the smaller cap area. And this is not to say micro cap, and it's not to say garbage companies. It's just to say companies that are around your $2 to $5 billion area, not the ones that are in multi-hundred billion dollars, right? So say anything under 10 billion, right, I think is going to be interesting. But yeah, I think Palantir kind of leads to that, where you can look at HIMs and they kind of move together and they kind of sell off together, even though they're not at all related, because they're part of that universe of, looking for big cap or small cap kind of names. And for those who missed it, I'll just go. If you look at RTY, line is how many people are short. And they've just been shorting aggressively as RTY has been climbing, or the small caps. And then NQ, they've been buying. So the question is, do you think the masses or the herd is generally correct in trading, or do you think they're generally incorrect? I kind of take the camp of that they are generally incorrect when it comes to trading. So I want to take the other side of them. MPW, not MPW. Medical Properties Trust, Inc. You get a nice dividend, at least while you sit in this. So yeah, I would just look at this and say, here's a nice base. Wake me up if we break out of this base. And until then, you've got one low here at 650, a high, and a high. So 650 seems pretty easily to be the number on MPW. Above 650, maybe you get some sort of range. I'm one of those people. I'm going to be, more honest about what I think of technical analysis, right? And as somebody who, what I do at Stats Edge is I combine technical analysis with statistical analysis or quantitative analysis. Essentially just means we build a strategy, and the strategy says when X occurs, there's a decent chance that Y will occur. And what we do is we end up building these model. Right? You can see all these over at Stats Edge Trading. Right? These are the swing models, the day trading models, and the investing models. And then from there, those spit out ideas. And from there, we take a look at them, and if we like them, we take the trade. It makes it pretty simple how to do that. Now, this thing would never show up on a single model, because what we're always looking for in technical analysis is some type of an extreme or some type of movement or something that we can predict with any idea. And you can't predict things that are just kind of in a base and just meandering about, because there's nothing from a technical analysis side that will say, hey, this is something that is, there's going to be a big move, or there's a potential for a big move one way or another, because it's just sideways, right? So resistance up here and support down here, and a downtrend before then. So until you get one of those, you just do nothing. This is why you see a lot of my responses are, I don't know, because what we're trying to do is identify a couple things: is trend, and then something unusual. Like of these systems we build, right? One of these is a breakout trade. Another one of them is a pullback system. Another one is a mean reversion system, which actually means we're buying stuff as we're trying to catch the falling knife, and we're buying stuff as it's selling. The what we don't do is try to take bets when they're in the middle of a range, because in all of my testing, and each of these strategies has like 20,000 trades in it that have been tested through. As soon as you enter a range, there is no edge in guessing which way the range will resolve. There's more of an edge in just saying, let me know when it resolves. But hey, you get a dividend, right? So if you want to hang out there and collect your dividend in the meantime, fill your boots. KULR. Wow. Came all the way up to all-time highs at 33 bucks and then just lost 88% of its value. After first rocketing 5,000%, it like lost 90%. This is a heart attack stock. So this one's a little bit more interesting because at least you have something extreme happening. Now that extreme is down and not what you want to see, but you have this prior support, and it's pretty significant here at say $5, where you've had this low here at $5 and then this low here, and now you're at that. And if I actually draw this a little bit more precisely like I wanted to, we've undercut that $5 low. So there's a kind of an undercut and rally trade to potentially be had here. Talk about this in the Friday show sometimes with Jordan. I know he likes these, where you have a clear area of support. That support gets violated. You trade under that for a period of time, and now you want an aggressive push higher. You don't want it just to float up over time, but you want a pretty substantial move higher. And if you get that, then there's potential trade to be had there. So I would watch that and say, hey, if you get a close pretty quickly back above, let's say, I don't know, $5 to 550, maybe there's a shot to be had there, something you could potentially take a trade on. Until then, you're just sitting at support. And you have to know that if you're taking a trade like that on something that's down 90% and you're looking for it just to bounce a little bit here, you'll most likely be wrong. But if you're buying it at 5 and then you're stopping it out at 4, and then you've got a chance for it to go to 10, the risk reward there is pretty compelling, even though, again, it's very, very likely you'll be completely and entirely wrong on it because you're fighting a pretty epic trend. PSKY. Paramount Skydance Corporation. Interesting. Oh, is this like the new? Yeah, Paramount did a merger. This is interesting to me. I actually like that you bring this up. I'll add this to a list because I've been talking about it a lot. These companies that have been in a base. I think we talked about it with Intel. I've shown you guys Owlet a bunch, right? That I bought some of this kind of in this area as it looked like it was breaking into this base. I still think this could move higher. And it's just a company that got hammered, but then stopped going down for another number of years. And Paramount, oh, so it's not Paramount Global anymore. Where is the PSKY? PSKY. Why would you lose the power ticker? Anyway, got completely hammered from $11, right, down 90%, and then has just been basing sideways in this base. So this is one of those potential base breakout plays. If you can get above, like, say, 16, 17, this prior high right here, you could take a shot, and then you're wrong if we get back into that particular range. So that's a pretty good one. I do like that as a potential play, so I've just made a note. And again, it becomes easy enough because you just, like, boom, you just set an alert right there, and you just say, you just name it, low base breakout play. There, now I never have to look at this thing again. If it breaks this area, I'll be alerted, and maybe I'll take a shot on it. And if it breaks back down, who cares? Can move on with our day, right? SNDL, this is one of those little marijuana guys. And some of these marijuana names are starting to put in this same kind of look, right? That I just talked about that I do really like. I've just seen it work so much recently that it makes me way more interested to potentially take a shot here. And by take a shot, I just mean, hey, if you get above what, $283, right? You're YOLOing in a little bit there, putting a stop maybe $2, so $3 in, $2 out, and then if it makes, so you're risking $1. So then the question is, can it make $2? Can it make $3? If so, it's a pretty decent little trade. So I like that we're back at this support, this prior area we are right here, and we've just been hanging out inside this range. I'm pretty sure this is a marijuana company, and MSOS has been on fire. Full disclosure, I own some of that. I own MSOX actually, which is the 3 times leveraged MSOS. That, and again PSIL. I own a lot of MSOX. So yeah, that one looks good. And the SNDL, we're seeing some good relative strength from that sector. I worry that if there is a reclassification, descheduled, whatever, that will be a massive sell the news event, because you've had such a run up in anticipation to this event that when the event happens, it will just all come crumbling back down. So just be aware of that. It's a trade as old as time, is if something runs up in anticipation of some news, then it gets the news and just falls apart. Right, that becomes problematic. Yeah. So just know that. Wolf. These miners are interesting to me. You see, I already drew it here. I like that it broke this massive downtrend. It's been a while and is holding. I want to see this go on for another couple weeks and then maybe take a base break or resolution here to the upside. And the reason for that is the short float on some of these names. So if you do Wolf, TeraWolf, 31% shorted, and they've shorted a bunch in this area right here, call it like $6-7. So they're not really that worried right now, but if we start to break out, that's when I think people start to get worried. And if you look at WGMI, which is the mining ETF, well, that's been shorted more and more in this area right here, and this chart looks interesting to me. So WGMI is not the crypto that I saw, but the this ETF. This one's very interesting because if you look at this massive resistance here at $29-30, right, it's pretty significant. So through that, right, now we're talking. Right, if we can get up and through that particular zone right there, or that name. But yeah, these are awful businesses in the long run. I worked for one. I worked for a crypto miner. It's not something you want to hold on forever because they just suck. They're just not good businesses. However, that trade's a trade, and if they're short and they're wrong, they have to cover. And there's some good ones to be held there. So you will not catch me holding these things for prolonged moves or extended periods of time. These are like a hit it or quit it style trade to me. They're just very, like, they're energy intensive and they're capital intensive and they're equipment intensive. And there's just a lot of things that go into these names that end up making it a very hard business to operate into. And for me, when I was doing it full time or working with them, this was way back. And it was back before Ethereum was staked, and Ethereum was actually mined as well. So we mined Ethereum and we mined Bitcoin. And you had to have a warehouse or multiple warehouses filled with these GPUs and computers. You had to have staff watching them 24/7, because if a miner just stopped, someone had to go and figure out why and try to fix it. You had energy, then you had to cool the rigs, and you had to watch out for like severe rainstorms or whatever, and it's just so much stuff went into it. it was really, really hard business to kind of, when I was looking at it, I'm like, why are we doing this? Right. And then you're all of that to mine an asset that could very easily just get mined at a way worse value than it is. I mean, at the time it was Ethereum, and it could just tank. And same with Bitcoin. So yeah, so someone's saying $1 billion senior note closed on August 22nd. I don't look at that as a good thing. It's like you had to raise money. I don't want my company to have to raise money. I want my company to make money. Right? That's, especially at an environment where interest rates are so high. If this was 2021, interest rates were zero, raise all the money you want. What do I care? The fact that you have to raise money now, that gets me a little bit worried, because it's like, why? And off whose back are you raising the money? You're either doing debt, and if you're doing debt, it means you're raising the money off the back of future returns, because you'll have to pay the interest rates and that debt down, or you're doing it via equities and you're just straight diluting shareholders. And neither of those things are really exciting to me. That get me like super interested to potentially buy. But for trade, I'm more looking at this like I'm looking at Open. I don't even really know what these guys do and whether they'll be in business in a while. But they're heavily shorted and they're ripping. And Wolf is heavily shorted and it's ripping a little bit. So there might be a play to be had there. Snow. Yeah, I think this 200 area on Snow is hugely important. It's a very psychological number. Snow is one of those that I am looking for this kind of, call it a low base play. Right, what Rivian, Owlet, DNA, there's a couple of these that look good from this low base kind of play. It's just got to get 240, 230, 240. Then it's interesting. This base is a little bit wide for me, but the reason I think these bases are working specifically in this environment is because the thing that has really moved the market for the last couple of years, semiconductors, AI, we've all been here. We know what it is. They're getting a little bit long in the tooth. So investors are going to look for something else. And if you have a company that tanked, but then has just been consolidating sideways for a long period of time, that just shows me that there's some value investors who every time this thing gets anywhere between like 150 and $100, they're buying there. And then when it gets up to 240 or so, they're not necessarily selling, but they're just not buying anymore. So it comes back down, they buy a chunk, and then it drifts back up, and they go, no, that's too rich for my blood. And they're just doing that over and over and over again. So when those people, when it starts to break out and you get those momentum traders and the trend followers and everything involved there, that to me is a little bit more interesting. But that's why I think it's happening. It's money rotating down from this big win that they've had in AI and all of this. They make so much money in NVIDIA and a lot of these semiconductors names. When they get that money, they have to do something with it. And I think they're looking for different sectors and different places that were bankrupt or priced for bankruptcy, which Owlet certainly was. It was a $100 stock that went all the way down to $3. So it was priced to bankruptcy. And then all of a sudden it starts making money, right? That's what happened here. It started to make money. And it's no longer looks like it's going to go bankrupt. And now it's like, okay, well, if it was priced to go bankrupt and now it's not, maybe a trend starts higher. I don't think the trend goes all the way to the top, but who knows? KYIV. Jesus. You guys find the craziest stuff. So from $10 to 16 and then gets cut down 25% to 12. And is it halted right now? Or is it just very low volume? No, that wouldn't be a halt there. That's just very low volume. Technical analysis really can't tell you much here. It's trying to break out of this prior range, but every time it does, it gets sold off. So for me, I want to see a couple candle closes above 13, but this is a mess. This guy. This looks like a SPAC. Did it ever de-SPAC? Epics. Oh yeah. No way. Put a smiley face or a laughing emoji next to this one. I don't like $200 stocks that go to 77 cents and are down 99.5% of their value. If there's one like word of advice, I'm not giving advice. I am not a financial advisor, nor am I your dad. Do whatever you want with your own money. I don't care. Just stop the in your brain. Try to divorce what happens in the rest of our lives, where if you buy that piece of bread, you buy that loaf of bread, if it's on 50% off, you feel good from the market. That a lot of people say, oh, well, the bottom of the chart is support and the top of the chart is resistance. And that's not, you just do this, right? That's not the case at all. So this thing could go to 43 cents pretty easily. Good companies go up. And unless you always got to look at, if you're buying a company like this that's getting hammered, or you're interested in this company that's getting hammered, you better know something fundamentally that nobody else knows. And unless you got some of that sweet, sweet inside info, I don't believe that you know something that nobody else knows. And this is why we do all this quant stuff and we back test things. We do all this shenanigans over at Stats Edge Trading, is because I don't know anything. And I am just old enough that I can admit that I don't know anything, and I don't need to pretend to know anything. I can simply say, yeah, I don't know what's going on. Let me back test the system. And when that system says that there's an edge and it spits out a symbol, I'll do a little bit of TA and I'll buy the symbol if I like it. Yeah, this kind of stuff is dangerous because this is probably a zero. Right, there must be some news about a drug or something. Yeah, I don't know. It's not even any news on here, but it's like it's bad if it does that. Space, everyone's saying ASTS or Rocket Lab was the question. UFO, it's a good little ETF to do this. So UFO is just space in general. So you can always go if you look at, so UFO ETF holdings. UFO. There we go. So this has stats, it has Rocket Lab, it has ASTS, MDA Space, VStat, Garmin, hilariously enough. But this is just a basket of space things. I think I read somewhere that there's more ETFs now than stocks, which is hilarious. This looks great. I mean, you can see I already got it marked up. I like the fact that we are potentially flirting at all-time highs, and we've been basing there for enough time to frustrate people, which is good in my books. I want people to be frustrated. And yeah, same with a lot of these. So if we go ASTS and pull back down, this is the anchored VWAP from before this monster move. Pull back down, held as support, nice little bounce. RKLB, same thing. Right, pull back a little bit, nice little bounce. And a lot of these are flirting with new all-time highs, and then UFO is also flirting with new all-time highs. So this is a great little potential base breakout. These are one of those sectors where you want to play the momentum when and if the momentum gets hot. You get a nice little move out of it, you take it. Right? QDVO. A growth income ETF. You just got to find what is the underlying with something like this and do your analysis on that. Right? Don't do the analysis on when it's an income ETF. Right? That's more about like read the prospectus and all that and just know what's inside of it more than anything. And I just showed you how to do that. Just write QDVO holdings. And you can just go QDVO ETF holdings. NVIDIA, Microsoft, Apple. So this is the Mag 7. MAGS is another way to look at it. So if you're bullish on this one, when I see income ETF, it's probably one of those that like sells options against positions or something like that. Just understand that you will always underperform if you had just owned the ETF and sold a little bit over time. There's something about getting paid out that people think is like a dividend or whatever. A lot of people like that, but it'd be the exact same if you owned this ETF and you just sold a little bit, you'd get the same amount of income, or sold calls against it yourself. It's just whether or not you think the Mag 7 is going to continue to be the thing. For the short run, I don't, because of what we talked about earlier with, people being long stuff and short other, and who knows. Let's do BABA, and then that will be it for today. You can see I already have it drawn out. I really like this price here on BABA, this kind of 120, and it's getting really, really tight here and potentially breaking out here of 120. I like China as a whole. If we look at FXI, looked better earlier today, selling down a little bit, but you can see this break of this prior resistance here at $40. And I like it because no one's talking about it anymore. Right? Everyone was talking about China kind of back here, and everyone was talking about it here, but everyone seemed to kind of forget entirely about it and that there's supposed to be some sort of China deal and all kinds of stuff like that. But if we end up getting a breakout here on FXI, that's going to carry through with BABA and JD and Neo and all of these names. So make sure you're kind of doing that and understanding that accordingly. But that is my time for today. Quick look at the market. We're turning green. We're almost green on the day here on the Q, on the SPY. We are green on the day in the Qs. So some cool turnaround action on what looks like an overall bullish time. So as always, I appreciate everyone for coming by. I know they run these all week, so make sure you're back and you can get someone else's point of view. Maybe they'll like some of your junkier names a little better than I do, but just, trade safe out there, right? Buy stuff that's going up. Don't buy stuff that's going down. And you can Google the literature if you don't think I'm right on that one, but it's definitely something to check out. And until next time, I'm Michael Nauss, and I see you on Friday, I believe.